Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the Chief Strategy Officer of BPC, Jane Loginova. Thanks so much for joining me.
Thanks a lot. Hi, Elliott. Hello, everyone.
Okay, so before we get cracking, let's learn a little bit more about BPC. Okay, so Jane, BPC, it's a bank, it's a payments platform. Tell us more, and also I think about its subsidiary Radar, which you lead.
Yeah, sure. So BPC is a technology company, first and foremost. We have been serving banks, processors, fintechs, digital banks these days, anybody in the payments ecosystem who has a payments business with the technological solutions to run their payments business. So in a way, we're tech behind the tech of fintechs. Our clients have, our clients spread all around the world. We're present in Southeast Asia, Latin America, Middle East, Africa, Western Europe, actually in 100 plus countries. And indeed, the client base is a little bit of a testament to the evolution of finance. So we have traditional banks, top tier global banks, digital banks, microfinance companies, and wallets and fintech companies that are omnipresent now.
Okay, and I think, as financial technology companies go, you're quite long in the tooth. Does that make you a bit more boring than the rest? By which I mean profitable and growing sustainably.
Yeah, I would say that's definitely us. Yes. So not that many people know about us. So we definitely haven't been investing in heavy marketing, but on a boring end, on a more nerdy end, we have been investing heavily and consistently into our technology, into our clients, hoping that it's the reputation that will in a way, win us, win us the reputation and our statue as well. So yeah, so I would say we're on a more boring, nerdier end.
And just before Russia's invasion of Ukraine, you announced you were partnering with TCS, aka Tinkoff, for its expansion into the Philippines. Given what we've seen vis-a-vis Russian banks, and that Tinkoff, of course, is Russian, where does the deal stand? Can you give us any insights there?
Yeah, look, here it's it's their decision. So we are, and obviously I cannot comment much about them. So they are going through, certain restructuring, and obviously, it's been public that Tinkoff, the shareholder, has sold it. So, let's see what the team does. But for us, we if the team does something else, we'd be happy to support them. But of course, I think that was a casualty in this whole process, because I think they are an amazing bank, probably they were the first super profitable digital bank, and I think they could have done, they could have built a great business, just because, again, like, the team that they have is experienced, that they know how it's done, and they know how to build profitable business. So anyway, I hope, whatever the team does next, I hope they succeed, and if we can support them in their new venture or whatever it is they do, we'd be only happy to do that. But again, I don't, I'm not privy to their plans yet.
Sure, and of course, in addition to that happening in the background, we've also got the prospect of a looming recession, and obviously the volatility and downturn we've seen on markets. Given that you've been around for a bit longer at BPC, does that help in the company dealing with whatever's coming next? Because so many fintechs have never seen a recession in their lifetime.
Yeah, look, I think from our perspective, indeed, the company is 25 years old, so we have gone through numerous crises, and because we are, more emerging market focused, or have been emerging market focused, although now we also, have an instance in the US. We have seen, plenty of, volatility, as in EM. They happen much more regularly, probably, than in the developed world. So there's definitely no panic. There's no, there's no anxiety, but definitely we are just much more focused. And I think it's going to be quite interesting next kind of year and a half, 2 years, however long it takes, for the world. I think we're all on the same page, knowing that it's going to be just macroeconomically, potentially also geopolitically, quite challenging times ahead. So it would be quite interesting to see how all of the, the startups, even super well-funded ones, how they will weather it. I mean, it's been quite public that the biggest VC firms have sent pretty strong messages to their portfolio companies that they really need to focus on their profitability, on their sustainability. So I think the days of growth at any cost, or getting as many clients as possible, but just by pure burning cash, I think those days are definitely over. And I think now is the time for. I think now is going to be the time of a bit more discipline. So, but also quite curious to see, and I'm quite, excited about these times, because ultimately, it's like early 2000s. That's when the new Amazons can be made, right? So. I think the companies that will weather this storm well, they will be the ones that position themselves, for a pretty kind of bright future. And naturally, from our perspective, we're privately owned and sort of self-funded, which makes us even more boring. But definitely that gives us a bit more kind of, I would say, security. But we are definitely super kind of focused on priorities right now. On we're not expanding, but we'll definitely try to pick the strategic lines that we really can go all in, and we cannot really look at anybody really afford to have like too much of other nice to haves, so to speak. So it's about discipline these days, I would say, and focus.
Okay, so we've heard about BPC. Let's now get to know Jane a little bit better. So, Jane, if I'm not mistaken, you started off in investment banking. Was the plan to make that a career, or was it just to get the experience that you could then apply, leading a company?
Good question. I think, probably being in my late 30s right now, I always think about how I had all those plans, and those kind of, they all went somewhere else, so they never materialized. So I think I just followed at the time. I followed a very kind of conventional route, sort of like try to do well at school, do well at university, and then get a good job straight out of university. And that's what happened. So I went to London School of Economics. I did an internship at Goldman, which was very much of a the thing to do those days, especially if you were at LSE, which was very much catering for the city of London in terms of jobs. And when I joined Goldman, I loved it because I understood nothing at the time, but I thought that's like the highest concentration of super interesting and smart people I saw in one place. And so I kind of wanted to be them. And again, I was very lucky with the team I had at the time. They gave me a lot of kind of responsibility and exposure quite early on. So I wasn't just kind of boxed as a, in one particular thing and just slaving up presentations, which I was doing, but I had a pretty good, experience, which was necessary for me at the time. It taught me professionalism, and it gave me a good idea of, like, at that time, what I thought I wanted to have. So when I was at Goldman, I definitely saw that as a career plan. But then it was, again, like, it was a crisis of 2008, and I was in a structured finance team. So we were kind of one of the first to leveraged finance and all that. So we were one of the first to really see the effects of crisis. And then I moved to Moscow, where ultimately my boss at the time, he became a CEO of Russia. That gave me a bit more kind of different skill set, different exposure. So but then he left, the industry changed. So then I left when I thought that becoming too complacent at the job, and it wasn't that interesting anymore. And so I was looking for something that was small enough where I can make an impact, but ambitious enough where there would be a trajectory of growth, where my international experience could be valuable. And by various sort of situations, BPC was that place, and it's come a very long way since the time I joined it.
Okay, and in terms of when you're not at, I mean, I guess it takes up a lot of your time, but when you're not at BPC, Radar Payments, what do you get up to?
My kids, my family is I would say my priority right now, and they definitely take up the rest of the time. And as a typical mother, you always think whether you actually whether you spend enough time on your kids, but then as a professional, you kind of do wonder whether you spend enough on your work. So there's that balance as well. So, but when it's not family time, I try to do a lot of sports. I try to travel as much as I can. But I would say between work and family, and my kids are at the age where I believe they really need mothers. So it's the 3 and 6. Definitely, I would say they are my kind of focus. But to be a good mother and to be a good professional, I definitely take time for myself, which tends to be like 5 in the morning, where I just go for like some long sport sessions, runs, etc. Yeah.
It's your me time at 5 o'clock in the morning.
Yep.
Okay. So Jane, look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with BPC Chief Strategy Officer Jane Loginova. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Jane, let's talk about the future of finance. So, what's the biggest challenge or concern for fintechs right now? Is it interest rates? Is it inflation? Is it financing? Is it recession fears? What's the biggest concern right now?
Yeah, look, I think it depends on which where you are in terms of maturity of your fintech. I think if you're a fairly small one that kind of recently raised funds, so you have the funding to spend, and I think there you just need to go kind of all in. So focus on your strategy, be very clear about it. Again, I don't think, as I've mentioned, that now is not the time to kind of spread too thinly everywhere. So you need to kind of focus. So I think if you're basically young and funded, then just follow the dream, follow your plan. I think the ones that are a little bit more mature, they will be expected to show the returns, to really show whether their business model works. And again, it's also time kind of of certain kind of discipline. And for the big guys, it's I would say it's to some extent also survival. But what I mean by that is not that somebody like Klarna will kind of go down, but even with Klarna, which has been quite public in terms of the news, you can see the valuations going down quite a lot. But again, me being in business, I don't think as a shareholder you should really worry about your valuation. That's something that kind of happens. You cannot really kind of control it. But I think it's real, growth of the business that, the relevance of the business that's necessary. So I think the theme that I'm kind of saying, so I would say, yeah, a tightness of the liquidity, tightness of available kind of cash will make all of us be quite prudent, disciplined, and focused. I don't think that's a bad thing. But everybody everybody should kind of ride that differently. But again, with that I think it's sort of the best companies that will even get better once they come through this. But I would say the tightness of the liquidity and overall change in the kind of the recessionary landscape. So hence the layoffs. But again, like with the layoffs, you may have access to very good talent, which say half a year ago, it was impossible to hire anybody. So that's the usual kind of thing. Valuations go down, but suddenly you have the good talent. In happy times, you can't hire anybody.
Right. And of course, well-capitalized companies and profitable companies will be able to use this as an opportunity to perhaps buy other companies or to acquire or to get talent that they wouldn't have been able to get beforehand. Are you expecting more acquisitions to take place as companies run out of cash or perhaps realize
I think
that
so.
they've
Yeah,
just
I think so. I think so for sure. Because again, like certain companies, nobody can be that arrogant anymore, saying that I am valued as X these days. And those companies that are either suffering, um, definitely the big guys, or even the mid-level guys who couldn't afford to do M&A, let's say, for either acquisition of client base or acquisition of new know-how, they will be able to do that. So yeah, I would definitely expect more M&A to happen.
And how important, big thing this year and certainly building up to where we are right now has been a focus on kind of ESG, environmental and social and governance issues. How important is it these days for customers, investors, and business leaders like yourself for the financial services that you work in or on to have a positive impact?
Oh yeah, look, I mean, it's 100% there. I think if it's firstly, it's very highly imposed by be it your investor base or your, I don't know, board, but that's kind of in one way or another, big or small, you have to do certain ESG contributions or be ESG aware, but actually make an impact on that. But I also think that somehow, maybe through COVID, maybe with just everything that's happening right now, I just think that even the cynics among us who at first thought that ESG was just something that's like nice to have to put in an annual report, I think more and more people have become not cynical about it. There are a lot of environment and climate change is real, and you have to be blind not to notice it. The social issues, diversity, again, it's like we're not going to talk about what's happened in the States last week, but I mean, all of these things I think are so much more at the forefront, and I think a lot of people, but definitely the companies, they have to do what they can. And again, other than the fact that you absolutely must from investor, lending, banking, any perspective. So.
And just finally, Janie, big tech has kind of been moving slowly and surely into financial services. For example, Apple's recently announced plans for a buy now, pay later product. I guess since you're not consumer facing, you're kind of like, as you said, the tech behind the tech. Maybe this is more of an opportunity than a potential threat for you.
Yeah, look, I mean, I don't necessarily think it's a threat. I would generally say that I expect them to do well. Apple's and generally also some big banks of the world, because they have what Goldman is doing and JP Morgan is now doing in kind of going into digital banking. They in a way had the ability to see what was happening in the playing field. They could learn from the mistakes of others. They're extremely well funded. So I think they will make their move and eventually they will do super well. And I think Apple also, they didn't jump in on this train when it was like taking off 5, 7, 10, whatever years ago. But they have the customer base, they have the reputation, they are smart guys. I think it's, from what I see, it's a very well-run company. So I don't necessarily, I think it's a good thing. I mean, you want good companies to do well, right? So there are issues like when obviously big tech maybe just, eats up certain like small companies straight away. And that way, maybe that's obviously not great for competition. But basically, if we're just talking about like Apple or the big banks going to the space, I don't think it's necessarily a bad thing. And again, from our perspective, because we are doing technology, we could hopefully service those guys with the view that they don't need to build the tech themselves. They could leverage of those who have already, walked the rocky road.
Okay. So look, Jane, it's time now for our rapid fire round of questions. Are you ready?
Yeah, not sure for what, but yes.
Okay, so just one word answers is what I'm after. We've got 90 seconds to get through as many as we can. So I'm going to start my timer and away we go. So, what fintech segment, in your view, has the biggest potential over the next 5 years?
SaaS, anything.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
Companies or my personal?
In your personal financial life.
Everyday banking still.
Are we at the beginning, middle, or end of the fintech wave?
Beginning.
Do you have a metaverse strategy?
No, but we should have one.
Do you think regulations in the EU and US are keeping pace with new developments in the financial industry?
No.
How would you describe non-fungible tokens, NFTs? A scam, B, an interesting concept, or C, part of the future that we don't want to miss out on?
C.
Have you ever invested in crypto?
No.
Are physical points of sales part of the future of finance?
Yes.
On a scale of 1 to 10, 10 being the most likely, how likely in the next 10 years do you think it will be that one of the neobanks will be as profitable as a top-tier legacy bank?
7.
CBDC, central bank digital currencies, will become a mainstream reality in the EU and US?
In distant, well, let's say 5.
We're out of time. I'll just ask you the final question. A final one was that you will be able to open a crypto account at a top-tier bank.
6.
Okay. All right, Gemma, look, I'm afraid that's all we've got time for. So I really just want to thank you, BPC Chief Strategy Officer Jane Loginova, for joining me today. Thank you so much.
Thanks, Elliott. Thanks a lot.
And for everyone watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. Hope to see you next time. Bye-bye.